AI data centers are about to double global electricity demand. Wall Street is pricing in rate cuts, and billions in long-term contracts are being signed before companies even finish building their infrastructure. This isn't hype. This is the biggest shift in tech and energy since the birth of the internet. And today, I'm breaking down the company's position to ride this wave straight into 2026. What you will learn in this video: short summary, the December market pattern investors look for and whether it matters today. Why AI, data centers, and nuclear energy are seeing explosive capital inflows. The companies with the strongest growth, fundamentals, and technical momentum. How I score each company using valuation, financial strength, momentum, and trend direction. Which stocks I rank highest heading into 2026 and why. By the end of this video, you'll have a clear, data-driven blueprint for navigating the fastest-growing sectors in the market right now. Hey everyone, welcome back to Finance Flicks Hub, where we break down markets, money, and megatrends using real numbers, not hype. If you love learning about investing in a simple, smart way, you're in the right place. Now, let's get started. Part 1. Market context, more information, added December trend historically. The S&P 500 closes December green 75% of the time. The Santa Claus rally last 5 trading days is positive 80% of the time. But this year, the setup is even stronger. Macro tailwinds right now, the S&P 500 is trading near all-time highs. Nasdaq is seeing heavy inflows into mega-cap tech and AI names. Investors are expecting interest rate cuts, which historically boosts growth stocks. AI data centers are projected to double electricity consumption by 2030. Over $100 billion in AI infrastructure spending is already committed by hyperscalers. Companies are signing energy contracts decades ahead because they know demand will skyrocket. The U.S. government is directly financing nuclear restarts specifically to power AI data centers. This is not a normal cycle. This is a structural transformation of the entire global computing and energy system. And the companies benefiting most: infrastructure, networking, compute, and power. Part 2. How I score these companies. My system filters stocks using for real drivers of long-term price growth. Valuation PEG ratio, price to sales, and free cash flow yield. Financial strength, revenue growth, margins, cash flow quality, and balance sheet health. Technical momentum, price action, volume, and trend alignment. Trend direction indicators like a DX and ROC that show whether buyers control the trend. This removes hype and keeps everything objective. Part 3. Company breakdown, full detail, plus additional info. 1. Nebius Group, the GPU infrastructure engine. Nebius is building GPU as a service data center infrastructure for companies that need massive AI compute, but don't want to build their own facilities. Key points: $20 billion in long-term contracts, $17.4 billion deal with Microsoft, $3 billion with Meta. Nvidia took a stake in late 2024, revenue projected to hit $7.9 by 2026. Still unprofitable, but revenue is locked in. This is a pure infrastructure play. Cash burn now, profitability later. Analysts project 101% upside in the next 12 months. 2. Chemico, fueling the nuclear revival. Uranium is the foundation of nuclear power, and nuclear is becoming mandatory for AI data centers. Fresh market info: data center electricity demand expected to double by 2030. U.S. approved $1 billion loan to restart 3 Mile Island, exclusively for Microsoft. U.S. aims to quadruple nuclear output over 25 years. Chemico co-owns Westinghouse, a major U.S. nuclear builder. Google, Amazon, Meta signing nuclear power deals right now. Chemico sits at the center of this transformation. Analysts see 33% upside. 3. AppLovin, the ad tech cash printer. Most investors still think it's a gaming ad company. But AppLovin rebuilt everything with AI's finished financials. On this list, revenue up 68%. YoY. EBITDA margin at 82%. $1 billion plus free cash flow per quarter. Net income $836 million, added to S&P 500. $3.2 billion buyback program. They launched a self-serve platform that's growing 50% week over week. Analysts expect 50% upside. For ARM Holdings, the royalty king of modern computing. ARM doesn't make chips. They license the architecture. Why it matters now? Every iPhone uses ARM chips. Data center ARM chips use 60% less energy. Google, Microsoft, AWS, Nvidia, all building ARM-based AI chips. Royalty revenue grew 21%. Data center royalties doubled last year. Partner in the $100 billion Stargate AI infrastructure project. Analysts project 44% upside. 5. Applied Digital, the data center builder with locked-in revenue. Infrastructure builder for massive GPU data centers. Key tailwinds: $16 plus in multi-year contracts, $11 billion from CoreWeave, $5 billion from a U.S. hyperscaler. NVIDIA invested in September 2024. First 100 megawatts facility, coming online now. 600 megawatts fully operational by 2027. This is a pure capacity build-out play with visibility. Analysts see 117% upside. 6. Arista Networks, the network behind every AI cluster. All those GPUs, they're useless without ultra-fast networking. Why Arista dominates? 27% revenue growth, 19 straight quarters of records, gross margins above 65%, deep partnerships with NVIDIA, AMD, OpenAI, powering hyperscaler clusters for GPT-class models. Analysts expect 46% upside. 7. Meta Platforms, the AI advertising giant. People overreacted to their AI spending. Fundamentals are strong. Current strengths, Reels, equals 50% of Instagram time. Facebook usage up 5%. Threads engagement growing. PEG ratio 0.38. Rare for a mega cap. One of the cheapest big tech names today. Analysts project 43% upside. Part 4. Final ranking updated with new info. Aploven Meta Platforms. Arista Networks, ARM Holdings, Chemico, Nebius Group, Applied Digital. This ranking balances current profitability, future growth, risk, macro tailwinds, trend direction. Thanks for watching today. Deep dive into the AI and energy megatrend shaping the 2026 market. Remember, in times like this, clarity is everything. Stick to the data, follow the fundamentals, and invest with discipline. If you got value from this video, hit that subscribe button and join us here at Finance Flicks Hub, where smart investing meets real-world insights. Which sector do you think will benefit most from the AI boom? Chips, data centers, networking, or energy? Drop your answer in the comments. I want to hear your take.